Welcome to another one of our Money Talks videocasts. I'm Jerry Slusiewicz, your host. Today is Friday, June 10th. We try to update these things monthly with kind of our near-term, long-term forecast. Basically, since May 2nd, the market seems to have peaked out a little bit, probably finally on anticipation of the Federal Reserve Bank ending their quantitative easing program. That has been a system where the Federal Reserve has been pumping about $5 to $6 billion a day into the system through the money center banks, the basically 16 to 18 primary broker dealers. And those banks have been turning around, partially driving up the stock market. There's no evidence, they weren't told what they had to do, but lending hasn't really increased. So we feel that they were buying stocks or buying more bonds, and that's why the stock and bond market had done very well since the Fed announced this quantitative easing program, which is going to end here at the end of the month, June 30th. Now, can they change their mind? They could, but Fed Chair Ben Bernanke this past week did make an announcement in a speech that said it's going to end and we're going to see what happens. Well, what is happening is the markets are down a little over 6% since May 2nd, and they've dropped precipitously in the last week and a half. Markets have been getting hit very hard, and we're looking at next support around 1249, 1250 on the S&P, and right around 2600 for the NASDAQ. We've seen this will be today, will end 6 down weeks in a row for the Dow Jones Industrial Average. That hasn't happened since 2002. I think the S&P is also on its 6th straight down week. The NASDAQ had 1 week where it was up about a point. So things haven't been good for a while, but what we're kind of doing now is we're kind of dropping off of a cliff, and we don't want to fall off of a cliff. We want to make sure that there's some level of support sometime in the near future. Those were the support numbers I just gave you on the S&P and NASDAQ, 1250, 2600 respectively. The banking stocks, if you look at some of the biggest banks in America, or XLF, the financial sector, it is doing horrible. It's down over 15% from its peak. Stocks like Goldman Sachs, Bank of America, Wells Fargo, Citibank, JP Morgan are all negative for the year and all look pretty bad. They say money makes the world go round, and when the money center banks aren't doing very well, it's not good for the economy. That's what got us in this mess in the first place. Housing has also gone into a double dip or drop. Housing prices now are lower than they were back in March of 09, so we hit a bottom, bounced a little, and now we're at even lower lows. Sales are up a little bit, mostly on cash deals, etc. But economically, things have gotten weaker, and from a stock and bond point of view, stock market point of view, it's gotten worse. Bonds have been very attractive. We own a variety of bonds. We've taken inverse positions, meaning there's short positions against the market. That's been working out well for us and our clients. At first we used it as a hedge, but then we've been selling off our long positions over a period of time. Now we're pretty much short in bonds in our current portfolios. It's very important to take what the market is giving us. This false sense of security that this quantitative easing, that this Fed money printing system, it did help Wall Street. It did help the stock market. Bonds to some degree were also helped. But it didn't come down to the common man. It didn't help real estate. And now that that's ending, the next move in the market is going to be critical. Generally, there's what's called a summer swoon. We're in that time. I don't know how long it's going to last. We're taking the training wheels off the economy, and we look pretty unstable. Again, we need those support numbers to hold. Should they not hold, it's very, very important to have stop losses and have your positions reviewed. If you need help, call my office, toll free, 800-449-9501. My name is Jerry Slusiewicz. Hopefully you're seeing this on our website, but if not, it's www.pfp for Pacific Financial Planners, then the word invest, invest.com, www.pfpinvest.com, 800-449-9501 for your free portfolio review. Sign up for our free email newsletter, and again, stay tuned, catch our podcasts. Those are weekly. At some point we'll do another update of these videocasts on Money Talks with me, Jerry Slusiewicz.